Alrighty, what's up everyone? Great to have you with us this evening. Tuesday nights, back on the right night of the week. Dad is doing a whole lot better. I'm still on the throaties and large glass of water right next to me. This flu was absolutely no joke. It smacked me backwards for over a week. So I'm almost back to where I should be, not yet quite there. But thankfully, Dad's doing the training tonight, not me. So we are going to dive straight into it. Tonight is going to be absolutely loaded. So good to have so many of you on here live with us right now. And a bunch of you are going to watch this later on. So without further ado, I'm going to grab Dad and let's rip into the evening. Dad, where are you? Let's find you.
There we go. Right here. Thanks,
Got you right where you should be, thankfully.
You go and rest your voice.
Sounding healthy. I'm going to do my best to stay healthy and close my mouth now. Over to you. Let's go.
Yeah. Well, my voice is still taking a bit of strain. I've got a glass of water here, so hopefully it'll last the training tonight. But welcome. Nice to see so many of you online here. So I always look forward to this training. But I just want to say again, this season of trading has been the hardest by a long way. So if you are struggling a little bit, I tell you what, this has been one of the hardest markets. I mean, it's definitely the tariffs, that the uncertainty around the tariffs has flattened the markets. I mean, gold has obviously been rocketing around, but there haven't been the moves that I've been used to over the last few years. So it has been tough, but I believe the markets will settle down and get back into the waves. I remember like just one Saturday when I was trading, there were like 490 pip moves, The waves are moving now. There's a lot of range sideways, then a breakout, sometimes hard to pick. So don't be discouraged if you're finding it a little bit hard. It's definitely been a tough time to trade. Even the JPN 225, the Nikkei, I used to watch it and trade it a bit. I mean, there used to be 100 every single day. There used to be like 400, 500, 600 pip moves every day, easy to pick, and now they're smaller. So the whole market has been suppressed, but it will change once Donald Trump makes up his mind about tariffs. I think that'll settle down. So I just wanted to encourage you, if you are finding it tough, this has no doubt been the toughest season to trade that I've known. All right, so I'm going to jump straight into the training tonight and look at some long-term forecasting. So can I share my screen, Ty? Am I good to go? And I think this is the one I want. So let me click share. There we go. And I've got some beautiful faces here that I'll move up. And let's just get the comments so I can see the chat. I'm just going to open that up so I can put it on my top screen. We are good to rumble, guys. So I want to look a little bit at long-term forecasting. I've realized the more I've traded, the more I've tend to focus on less indices or currency pairs. Going back a year ago, I was trying to make as much money as I could. So I actually had, it wasn't always successful. Sometimes you made a lot, but then also you lost a lot. But I used to look at 4 things at the same time. So I'd split my main, I got a nice big iMac 27-inch. I'd split it into the now, I always say that, the NAS and the Dow. How many people get those confused? Come on. So it's the main 2 things I trade. Then on my monitor, I'd split it between gold and the JPN 225 and had them all on the 3-minute chart. And sometimes, I remember one morning I took 3 buys at the same time. I mean, I made a whack load of money. But I realized I also lost, and you can't spread yourself too thinly. So I believe focus on a few things. Don't try and trade everything that moves. And get to know at least find a favorite, your go-to. I know Ty, he does gold as his go-to. Mine's the US 30, the Dow, but I also keep an eye on the NAS. Because what I'm going to talk about tonight, you've got to be able to look at long-term forecasting. You've got to know the big picture of what the market is doing. And this morning, I took a trade, took a buy, and the reason why I knew it was going to rocket up was because it broke a trend line that I'd drawn on a 4-hour chart. So I want to show you basically, this is going to be really simple tonight. Just going through how I look at long-term forecasting, how I, draw up my charts, etc. And so what I do is, this is how I normally trade. So I normally have the 1 minute. I've talked about this a lot, the 3-minute and 8-minute. You don't have to do it like I do it. That's just my preference. And, when there's a line with all 3, then generally those trades always at least get to TP2, if not TP3. So you can't clutter your chart too much. So my 1 minute, I've turned it off now just for space. I normally have all the pivots on as well. So my 1 minute chart is pretty busy with the pivots. Then the 3 minutes, I keep absolutely clear. I just have the minimum. on the 3-minute, no extras. And then the 8-minute is what I use for my long-term forecasting. So if I want to show you now how I would set up my screen. Now, some of you may be better than I am at doing this, but this is how I do it, and it seems to work for me. So what I'm going to do, just to lessen the noise for now, I'm just going to turn off my MACD. So what we're looking at now is an 8-minute chart. So I'm going to ask 2 questions that we're going to answer that I got the answer through my longer term forecasting and chart preparation. I mean, why did price rocket up like 160 pips this morning? So this is the 8-minute, it shot up. And why did price stop exactly over there? Now this trend line was plotted after the price stopped, so there was no trend line. So you wouldn't have known that if you hadn't have done some kind of long-term forecasting. You wouldn't have known why price shot up and why it stopped. And I think I've said quite a few times, my journey on trading, when I started learning programming and making indicators, I always wanted to know why price did what it did. And then, of course, I built the indicator a lot around that. So what I do, first of all, so this is on everything I trade. Now, I mainly do this on the Dow and the Nas. I take my 8-minute chart, I turn off the indicator, and then the first thing I do is I change it to the 4-hour. And then I then start drawing in lines of significance. Now, just to show you this morning, so if I already had this trend line, I'll just, so it doesn't get too cluttered. This is going to look a bit cluttered after a while, but I already had this trend line. So I started with a blank chart. I had this, where was I? I had this trend line. Was it this one drawn in? Trying to remember now which one it was. No, I think it was that one. So I had that trend line already drawn on my long-term forecasting. Let me check if that was the one. So I've gone back to a blank chart now. That wasn't the one I'm looking for. So let me just go back. Where was it? The 4-hour. I think it must have been another one. It was this one. That's right. So this one I already had drawn. So that one was already on my, this is just my Zoom training that I just used a blank chart. So amongst other lines, I had that line drawn. So on the 4-hour, it doesn't look significant. But if I go back to the 8-minute, you can see how just that one line explained quite a bit of price action. So this is now back to the 8-minute, and you can see this trend line that I've drawn on my 4-hour chart. You can see how price respected it. All these points, I drew it on a 4-hour chart, but again, it was so price rejects it, drops, comes up, almost retests. So this morning, while I was trading, my charts would have looked like this. I'm just going to shrink it back. And I'll turn on the indicator. So this morning I was trading, and here's this trend line, and I saw price break this trend line. I knew it was going to rocket. So that is one of the reasons why price, once it broke that trend line, we can see that it went up how much? 150 pips. So that was already on my chart. So my 8-minute, I put all my long-term forecasting on my 8-minute chart. And so it's not cluttering anything else. And because I'm looking at 3 time frames at once, I can keep an eye. We can see, if we just open this 8-minute again, we can see how price came in. Just, there's almost like a bit of a retest. Not absolutely clear, but when it broke through, price dropped again. So that is how I set up the chart. So what I'm going to do now is just do it in a bit more detail, turn off the indicator. I just wanted to show you this one line before the chart got too busy. So the key thing is, I think I said in the little promo for tonight, is that, sometimes you get these huge moves. And very often it can be the news, but very often these moves are coming through because price has either pivoted off a previous level, or it's broken a previous level, or it's broken a trend line. And so it's very important to set up key levels on your charts and have that. And if you haven't got enough space in your computer, at least, have another chart somewhere you can flick before you trade. Just have a look, where is price heading? Are there any significant levels that price can either break through and drop, or, it's going to pivot off and reverse, or is there a trend line? So I use both the 4-hour and the 1 day, and then I look at any significant trend line. So, for example, if we just started over here, we can see, for example, well, let's put key levels in first. So I use horizontal lines. Just for tonight, I'm going to just use one color, yellow. I use two colors, not so bright. I use different one for supply and demand, but it's not absolutely pivotal. So I look at every key level where price has rejected, and then I draw a line. Now, this is going to look very busy, but it's very easy. You just basically find a key level that price has respected, and you just put lines at every key level. So there is a key level. What else is a key? This would be a key level. Now, it's going to look very busy, but remember that this is a 4-hour chart. If you change to a 8-minute chart, you would hardly see any of these lines. So it may look like, look, you can see here's a key level. Price tested there, went up, came down, retested to the millimeter. So if I quickly, just to put your mind at ease, if I went back to an 8-minute chart, so Les, by the way, Les, just do this to your chart and it'll stop it shrinking. Just you hold your mouse down and just expand. So if I put this indicator on now and went back to my normal setup, you would see none of those levels. Okay, here's one way down here. So it may look like you're having a very cluttered chart, but they hardly ever show. So at the moment, the only relevant level this morning was actually this trend line, which proved to be very relevant. You can see here, tested it, broke down, broke above, and then went up 150 pips. So it will look very cluttered. That's why you don't have to be conservative. We'll just go back to the 4-hour and turn off the indicator. So you basically go to every key level you can find. And you can also, like some of them, you can also plot. We'll come to channels in a minute. So I'm just looking very quickly here. This was another key level. You can just right click and press clone. Did I do that correctly? Clone, there we go. There's another key level over there. So we're just looking at key levels where price respected. Now, you don't have to draw thousands of lines because it's, price is going to go, is the Dow going to drop, 2,000 pips? Probably not. But let's just do one more just for completion. So this is the first thing I do. Let's just put this here. So I'm just putting in key levels. And so this is the key, you won't often see them on a daily basis, but when you do see them, they can be very significant. So that's the first thing I do. I put in the key levels, and then they would pop up on my 8-minute screen while I'm trading. Then the next thing is I put in a lot of trend lines, which they're pretty key. So we can see already here, we can draw a trend line across there. And the key things, you mustn't do this like once a month and forget. If you want to be a good trader, you need to keep your charts up to date and regularly check what price is doing. So what other key trend lines we can draw? We can also go from here. There's another trend line. We can see potential wedges forming. That's another significant one. We could also draw from here. This could also prove to be significant. Now, remember, when you log on your chart, you're not going to see all these lines. And you can see, for example, I may have had this one drawn a while back, but once prices left them, then you can, of course, delete them. But I also want to say, like there, for example, here was a channel that was created. You could see price kind of went up. So there's a clear channel. You can see when price broke, it doesn't look like a lot, but if you're on the 8-minute chart and price broke that channel, basically it dropped, 350 pips. So, it's massive. When price breaks these levels, it's very, very significant. Then you can also zoom out. If you go back to the 1 day, which I do as well, you can see that some of them will actually connect. So now we're zooming right out to the 1 day, and you can see, wow, look at this. This is a significant. We can see from this high going all the way back to February, that actually joins that trend line. So we can delete that one, that little one we drew. We can see that's a very significant trend line, that price. You can see it's tested it once. This is on a daily, came right back, and now basically prices come up and almost tested it again. So that we can see what else on the 1 day. So basically, this is quite fun. I enjoyed in this. That's kind of a little bit of a trend line there, not that much. And then, of course, we got right down from here. We can probably draw another. Now, again, I know I'm repeating myself, but it can look pretty cluttered. And you can see that that formed a channel almost over there. So look, I've gone a little bit over the top here, but let's just put that one over there. Maybe delete that one. So this is giving you a rough idea. So it's pretty easy. You know, you can also maybe take one here. You never know, price may come down. And we can see, looking at that chart, price action always amazes me. You can see how price made a high there, pulled back. We created the trend line there, and we can see again our price came up to that trend line, rejected it. Now, that may look a lot, but if you were trading in the morning, and that was a 3-minute chart, after that rejection, that was a drop of 700 pips. And so you get huge moves when price breaks these trend lines. You get massive moves. So again, if we just took this back to the 4-hour, it may look a bit busy. So it does look a bit like the matrix. I know Ty's probably better than this than me. But you can see there's that channel we drew. And if we went right back to the 8-minute now, and we just blew that up, you can see that we're now back on the 8 minutes. And if we shrunk that back, we can see again, it may have looked very crowded, but now on the 8-minute, okay, we've added this one. We can see price has broken this trend line that we added on the 1 day. Price broke through. You can see it came up and tested it again, and now it's dropping. Now that could mean price could drop quite significantly, although we're still above teal over here, which is the 2584. But when you see price do something like this, now if you hadn't have drawn this from the 1 day or the 4-hour, you wouldn't have known why there was a retest and why price is dropping. So from that trend line there, we can see price has dropped 70 pips. Okay, so that's quite a drop. Then there's one more thing. Now tonight's not going to be long because of our voices. Already my voice is getting a bit tired. So let's go back. Trust I'm making sense. But you can see again, it looks cluttered on the 4-hour. But when you draw this up and you shrink back to the 8-minute, you don't really see all the clutter. Let me turn this off. Of course, that doesn't look good now. We go back to the 4-hour. Then there's one other thing I like to draw, and that is I like to do a fib and leave a fib on my chart. So let's just straighten that one. It won't make any difference for now. So the way I do fibs, and we're going to look at how I did some this morning, is that I take where was the last big low up to the last big high, and I put a fib. So I press my fib over there. I take it from that low, and then I take it right up to bang on that high. And that can also explain a lot of price action. So if we just look now, we're still on the 4-hour chart. We'll get back and look at this morning's trade. We can see how price pulled right back. We can see it pulled back to the 302, then down. This is significant. It's gone down to the 0.5, the 50%, which is always my green line. We can see it's tested it once, twice, 3, 4, 5 times, and price hasn't broken below the 0.5. Now, if we just have a look, if we go back to this morning, so this again is the 4-hour chart. So if we shrink this back and go to the 8-minute, and we'll just reset it up, just get it back into size, and let's put the indicator on. We can see the question I asked when I started out is, why did price stop where it stopped? Well, we can see it hit the -236 right over there. Now, remember, that trend line wasn't there this morning, the red one. We could also probably say it also rejected, didn't really break above this 4-hour trend line we drew. And so if you hadn't have done any long-term planning, long-term forecasting, you wouldn't have known that the 236 was sitting over there. You would have known about this trend line either. And you may have said, this one's going to explode. You could have had your take profit away up there. And of course, price reversed. So, I mean, I trust that makes sense. I mean, this is huge for trading, is to have an understanding before you trade of likely pivot points. So again, from this morning's trade, there was the big move up, and then price came back and tested that and then came down again. All right, so let me just shrink my screen and get some water. Are there any questions? Fib settings. I can answer the questions. Here we go. Let me just go back. First question from Lee. So first question, you draw these at the start of the week and then daily also. Yeah, what I do is on Monday, because I don't trade it. I never trade on a Monday. That's when I look and I draw them. Obviously, when you draw in these lines off the 4 hour, they don't change much. So they may not change for days, but it's always good to have a checkup. Every odd day, have a look to see whether your chart is up to date. That's what I said earlier. So on Monday, I then look back and then I check all my lines, and then I delete all the older ones because some, obviously, prices moved on. They become irrelevant. So I delete all the irrelevant ones and I draw new ones in to help me plan. And then I like to think, so if I'm going back to the 4 hour, I mean, it's not always easy to do this, but then I try and think, let's turn this off. So on the 4 hour, I would like to think, where is price going? We can see this could be the Trump tariffs. I mean, these are big moves. This is the 4 hour, but you can see where a while back, look at how the 4 hour looked. There's a huge move up, huge move down. There was a huge move up, huge move down. Then this huge move up, and then this is range. This is a lot of this is the uncertainty around the tariffs. And so if we had to try and work out where price is going now, it's actually quite difficult. These other ones would have been pretty easy. If we added the indicator, is that going to help? Not really. We can see that price is going sideways. We can see this is the POC on the 4 hour, and price is just moving each side of the POC, and we're not sure where it's going. If we added the MACD, let's have a look here. I mean, that's also probably not telling us a lot. I mean, not telling us much either. And so this is quite hard. That's why I'm saying that this has been a tough season for trade. You can see why from the 29th of May, so going back a week or so, the moves were much bigger, and now we're really in range. So that's why it has been difficult the last week or so in trading. And so that was the first question. Start Monday, I always like to refresh my charts and delete and add the new ones. And the second one, can you show us your Fibs settings? I can put them in the, how do I edit this now? Here we go. Fib retracement. No, I haven't done this for so long.
Just right click on your fib, Dad.
Right click. Here we go in settings.
Right click
Here
on
we
it.
go.
And
settings. Here we go. So style.
There you go.
Okay, so those are my Fib settings. I'll just take a screenshot quickly. That's exactly how I do my Fib settings. And I'll just pop this in the feed. I'll just pop this in the feed afterwards. So those are the ones that I use. And so I've maxed out. I like using everything. So I've used every single box. And you can choose your own colors. These are the colors that I use mostly. And I'll pop those in the feed afterwards. All right, so you can see, if you can see why trading's been difficult, you can see the 4 hour is just been going sideways, where before we're having big moves. So if we went back to, when was this last move? From May, early May, there were some nice big moves. Now we're really in range. The market is waiting to see what Trump decides. All right, so the closing thing again was, before I just look at doing the Fib retracement in trading, the last thing I do is I draw a Fib based on the last current big move. So that's the one I did. And let's just have one last look at the 8 minute. Again, you will see that when you put your 8 minute, I've left out a trend line here too, where the other one was. Anyway, it doesn't matter for now. I had a trend line going through there. So if you put it back, you can see that you're not cluttered, but it gives you a lot of information. Turn this on last time. So this gives you a lot of information about price action. Again, you can see the peak here was around this trend line, plus the minus 236. All right, then the last thing I'm going to look at is just how I use Ty. Do you want to add anything there? Because you're pretty good at this. You're probably better than me. I mean,
I might. You keep going, and I might. We'll see.
Okay, you might. Okay.
There's a question there from Vic. It's about the main difference between your Fibs and my Fibs settings. You've got a bit of a ladder approach with yours, whereas I use them more so for retracements and extensions. But
yeah,
you can explain it how you would.
Yeah, so I mean, I use mine more I use it for long-term planning. Ty does more the opposite to me. So let me just answer that question. I'll just quickly go back. We got time. So if we took, let's just blow this up again, and let's turn off the indicator and make it the 4 hour. I'll show you what Ty likes to do is, if, for example, we were looking at this move over here, so I'll just turn this. This is only my practice chart. So Ty likes to do the reversal. So what he would do is I start mine at the bottom, move to the top, if it's a buy or if it's a sell from the top to the bottom. But Ty would do the opposite. So he would draw his fib from there down to here. And so when price begins to move up, he would like to see what lines are being supported. Is that how you do it, Ty? You do the opposite to me.
Honestly, both ways.
Both ways,
Every
okay.
line is either potentially support or resistance. There's just certain zones where the price is going up or down. I'll do a little thing afterwards. You do your part, and then
I'll do my part. So basically, I'll just redraw mine. So I use, for long-term planning, I'll go to the last move, and I put that up, and that's going to give us significant points. So if price does drop, for example, if price is sitting here, let's see how many pips we are, 160 pips away from the 0.5. And so that would be a very interesting level. I don't know if it could reach there tonight at the open, who knows which way it's going to go. But we can see the pattern. We've got bullish, doji, bearish. That could mean price is going to drop. So on your charts, this level here, which is like 41,922, that can be pretty significant. There's a high chance that price is going to come down and either pivot off the 0.5, and there's also, of course, this trend line. So we don't know. Price may come to that trend line, or it may come down to the 0.5, but those would be clear pivot points. So if you on the 8-minute, before I go back to the 1 minute, let's just put the 8-minute in perspective again. So if I was trading, I'd be looking, if price drops, again, it's now showing on the 8-minute chart, these are two very important levels. If price breaks this trend line, could drop quite far, but of course it could respect it and go up again. All right, so let's just look at the 1 minute. So this is how I use, say there are different approaches in trading. I took a couple of these this morning, but honestly, I was still feeling a bit sick, so I wasn't at my best. I only took 18 pips on the one move, and I can't remember on the other, and then I got stopped out twice for 2 positive. I moved my stop loss up too early. So, there's some positive trades, but it wasn't my best. Just want to be honest. Haven't traded much in the last month. But I think this was one of the ones I took. So what I do, the way I use the Fib retracement in my trades is, I said in the advert, like when do you take the money? How do we see those pip numbers? User freedom. So what you do is you put your mouse at the start of a candle and you hold down your shift button and you hold your mouse down. And then if you hold your mouse down, now mine's misbehaving, you often got to click it twice. You hold your shift button down. That's how you do that. So you put your mouse where you want, hold your shift button down, click the mouse, holding the shift down, you lift it up, and that counts the pips. All right, so the way I use Fib retracement, when do you take the money? For me, I know Ty stays in way longer. He sits through big pullbacks. I like the trades. That's why I like Hakanashi. I like the trades that move like that, not ones that are kind of going like that. So actually the 3 minute, let's look at the big picture first. The 3 minute this morning, there was a big trade here. I didn't take all of it. I wasn't quite on the money. But this buy, I would have entered. I did enter on this trade. I think I waited, but I got stopped out on this one for a few pips because I moved my stop loss too quickly. So I just want to be honest there. So when you draw a Fib retracement, obviously, they're all the different Fib numbers, 786, 618, 0.5, 382, 236, all those Fib numbers. You've got to work out when you're going to take the money if you can let the trade run. So the way you draw a Fib, you click on the Fib there. If you're entering here, you go to the swing low. It doesn't matter where you enter. You go to the swing low and you go to the first candle before a pullback. So if you're in this trade, I would have only entered, because it was rangy, you wouldn't have known it was going to break through this. The MACD histogram going bright green would have been my entry point. We're on the 3 minute here. And then I would have slowly moved my stop loss up. For me, Now listen, this is just my rule. I've never heard anyone say this, but I always take the money if price begins to close below the 236. And so again, as soon as you get in the trade, if it's powering up, it's great. But as soon as there's the first pullback, then immediately I take the fib from the swing low to the peak of the last candle before the pullback. And then I'll move my stop loss up. And once I've established where the 236 is, I'll keep my stop loss below that. And then if price breaks below, then I get stopped out. But I found that the 236 is pretty significant for pullbacks. And this is basically, I use it all the time. So in this case, if you had drawn a fib, you'd entered this trade, and you'd drawn a fib, the 236, if that was your rule, there would have been no need to exit the trade. You could have basically stayed in, moving your stop loss up. You could have set a target. Most often I do set a target, but I also like to let some trades run too. And so the 236, that is the, I would never go all the way back to the 302, although probably Ty would, but the 236 is where I'll take the money. So I'll have my stop loss there. If it stops me out, okay. Most times you still end up in profit. Obviously you do lose some, but that's how I take it. So I do a lot of trades also on the 1 minute. So let me just delete this for now. Oopsie, I've made another one. Are there any questions? Why do you use the 50 as opposed to the 786 or the 618 zones? So it's funny, the 50 is not a fib number, but it's just been proven over time that the 50 is huge for pullback. And so a lot of traders, I mean, if it breaks the 50, they're out. But for me, that's a huge pullback. If you pull back to 0.5, very often you may not even be in profit. So I don't know if that, why do you use the 50? I don't know if that answered the question. So the opposite for a sell, obviously you do it upside down. Maybe I'll try to find a sell. So for example, with this trade, I think I took this one. I can't remember what's what now. So if you entered on this candle, that would have been a safe place. There's separation, you're bright green. If you took this trade, boom, you're in the trade. If the peaked over there, so as soon as you reach the first peak, that's when I do my fib. So you go to the swing low, up to the top of the first pullback. That's the peak candle before the first pullback. Again, I got in here, I would have been moving my stop loss up slowly. As soon as I can draw a fib, then I will bring my stop loss to just below the 236. I mean, sometimes it's nasty, it wicks you out, but these fibs are so accurate. If you just have a look here, I mean, here's the reverse. Look how it respected, the 236 exactly on the pullback when price reversed. You can see how accurate these fibs are. I mean, to the millimeter, almost over there again. And so I would have stayed in this trade and maybe taken a few more pips. So again, it's pretty simple. You see, if you went down to if price came back to the point, right back to 0.5, you would have made a loss. Even here, if you waited for the 302, I mean, how many pips? You would have made some pips, maybe 18 pips. I mean, that's still okay. But for me, the 236 is where I set my boundary for pullbacks. And again, there's another trade. I think I didn't do well this morning, just being honest. When I took one of, which one was it? It was the small one here. So I think it was this one. So again, this I draw the fibs. You go to the low and the peak before the pullback. And this one, no, I didn't take this trade, but here I would have got stopped out. So I would have moved as soon as it pulled back, that one would have been stopped out, but you still would have made some pips anyway. So it's all pretty simple. I just used the 236. I think it was this earlier trade over here, actually, this bigger one. And I messed one of them up. But this one you could have stayed in. So here, if you entered in, that would have been a safe entry, would have been on you could have entered on the histogram bright plus crossover, or also would have been safe on triangle up. So if you did a fib here, you go to the swing low, up to the peak, and then you can move your stop loss up. Again, you can see why I like the 236, because it's always, look at the respect here, 1, 2, 3, 4, 5, 6, 7, 8. I mean, that thing, The 236 is massive for support in terms of whether a trade's going to move up. And so that's my rule. I use the 236. And if it carries on, then I stay in the trade. But if it breaks below, then I take the money. So none of these close below. So I don't know where my stop loss would have been. But if the candle closed below, then I would have taken the money, because it would have been a clear sign it's probably going to reverse. But you can see 236, massive. Maybe, I don't know if I can find a sell here. Let me just delete that, because it just looks the opposite. So if we took a sell, let's just go back. Let's counter trend where if there was a nice sell somewhere. I'm just looking for a nice move down. Well, look, there's not a sell signal here, but let's just say you took this trade. You may have good reasons to take this trade again. There's the first pullback. You're in this trade. And so to fib that one, I would have taken the swing high from there, the most recent swing high, to the first peak before the pullback. And again, can you see how good the 236 is? Price pulls back, doesn't close above it. And so if you were doing a trailing stop loss, however you want to put it, you could have actually stayed in that trade, was it rejected the 236, and we can see how price. So if you stayed in that trade, I mean, there was an extra, from that pullback, there was extra 134 pips there. So that is how I use my fib. The 236 is where I set the boundary. So if that candle had closed above there, I would have been out and closed the trade. But almost every single time, the 236, I think, is the best value in terms of using Fib retracement. So I think I'll hand back to you. Hopefully got some value about those things. I'll just
So good. So good. One more question there. Do you use the same for crypto? You can do almost everything on crypto except, I would say, large caps, like Bitcoin and the top things. Anything lower cap is just going to be that much more likely to be aggressive and have larger spikes and pullbacks, just because there's lower liquidity in whatever those lower cap coins are. But yeah, I got unless there's any other questions, there we go. Thanks, awesome. There we go, a bunch of appreciation there. Nicole, to answer your question as well about the 50 opposed to the 786 and 618 zones. Like Curtis Cobain obviously teaches on those zones in detail, and those are for much deeper pullbacks, and usually on a, you're not going to be placing a stop loss down there for the kind of trades that we're taking. But if you're looking to re-enter an accumulation, like you're buying into something, then those become great zones to enter and buy some more, kind of thing, depending. Like, I mean, Dad, if you got anything else, otherwise I'll give it a quick crack at a couple of things. I
was going to answer Selena's questions. I just showed to Selena. Did you see what I did there? The default is off, but you just basically go to your MACD, and you click on histogram, divergence lines, MACD, and then they will appear back on the screen.
Cool. So, just in case someone can't see that question later on the recording, that was how to find the divergence settings on the MACD. Very cool. Okay, sweet. Well, in light of having a few more minutes, let me do something similar. So very, very similar stuff to what Dad does in terms of high time frame stuff. But I mean, for instance, what we're looking at right now, if you can see my screen, this is my Bitcoin chart.
We can't see your screen, Ty, or maybe I need to unshare.
You probably can't. Well, at least give me a thumbs up if you can, because I can see you.
I've pressed stop share now.
You can see my screen? Okay, awesome. There we go.
Why can't I see your screen?
You are special. I stole it, so you might just have to, I don't know, unshare.
Okay, that's okay. I'll follow you.
But so this is the daily chart on Bitcoin, and you should be able to kind of recognize it from, there's the low of COVID down there on March. Here's our first big run up in the last cycle, the pullback, etc. And I mean, I did a whole session on Fibs and I covered some of this. But Fibonacci wise, going from a low point, to a high point up here, or let's just go to there. And then, we would have expected some price running up, pulling back 50%. We say, like, the reason why 50% is so common is it's because it's so common. So normal trends, most trends are normal, and most trends will pull back 50%, 50 to 61.8. So that's why we always mark up that area. So I'm just going to turn off this magnet for a second. So more often than not, we are going to have pullbacks that come 50 to 61% back. So this ran up, pulled back 50 to 61% because that was a normal trend, and then it extended up for one more run, and then it broke down. So that's what a normal happens in a normal trend. In a strong trend, price will bounce off the 382 and continue, and in a very, very weak trend, it'll pull all the way back to the 786. So by the end of this, say we got to, here, I'm just drawing it to this high point here as an example and taking it all the way across, then you can see what happened, right? Top of the bull market, we had, this is our new high. So from low point to high point, price broke down past that 50% level, paused around the 61, smacked onto the 786, bobbed along, came down to the middle of it at the 835-ish, and then that was the end of the bear market, and off we went. And if you want more detail as to that, then that's when you start getting trend lines. Put my magnet tool back on, and then I would like to magnet to there, and something like, well, we've got a lower, the rules with trend lines are you've got to put it on the high when there's a new low. So if this was our low, then I'm going to take this back to the high above that, which is still around, here without any of these crossing through. So as long as we've got these new lows, this is still our trend line. So we rejected it. Let me just zoom in here a bit more so you can see what I'm talking about. But over here, you can see that price came up, and then once we broke through, you can even see there's a retest, and then it went across a little bit further, and it came down for one more dip, but this dip gave us a new low, so that means we can move 0.2 on our trend line, the second touch point, over, because this is now our new low, and the origin of that low is there. So we've got our first point, our second point, and then price from then. That is, we have never been that low ever again on Bitcoin, basically. And that came back to that 786, 886 zone. So that right there would have been the amazing point where all of us wish we bought a ton of Bitcoin, right? Because since then, well, price has done what it's done. So that's how I, like in terms of Fib retracements, that's how I do them. Price goes up, comes back down, etc. But on the other side of that, you get extensions. So I taught on this a little bit a couple weeks ago, but just to show again quick. So from a high point, I can go down to the low point. It's not really getting all that accurate right now, but somewhere around there. And then 618, 236. Once price breaks, the reason I have these extensions is once price breaks above this previous high. Let me just check that's not someone trying to get my attention with this. No, there we go. That's Dad putting something in the chat with his settings. So once price broke our previous all-time high over here, now we can long-term wise forecast that price is going to get the 1.618 extension, which is 101K. And sure enough, price did run up and we got 101. 236 is the next big target at 140. That's still in play. And so that's how you begin to start forecasting these projections. And so last year we had this big run up and then this pullback to there. So drawing from high to low, that being the yen carry trade right there. Price dipped like crazy on the 5th of August. The VIX, the volatility index, spiked very, 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 very high. That was the low point. And so from there, our next extension points are up here. And price paused at the 1.618, and we got a new all-time high up here at the 236, 107K, before price then fell off a little bit. And anyway, you're starting to get the picture with how I draw Fibs. So I'm using those extensions. Those extensions come into play once price breaks the high. So once price came along here and shot violently past this, we're now in all-time new highs, new territory. Now we're starting to look for extensions as things start to grow and expand and extend. So that's how I do those. And then same thing with trend lines. I've got, low points connecting through. We had these ones coming through here, and then sure enough, what happened? Price came down, tapped that area there. What is that in terms of a retracement? Like, everyone thinks that it's all scary and freaky, but what would that even be? So from there to there, sure enough, that is inside a 50 to 60% retracement, right in that zone. And then after that, we had this trend line break over here, and it zigzagged along, punched up, and these zones that I've drawn here are also Fib zones where I expected price to pause. Same thing, high point down to the low point. And you can see right there, there's my 50 to 61% level where price came into the zone, paused, broke above, came back for one more test and shot up. The next zone I've marked out, 786, 886. And then that's where price, you can see zigzag, smashed the top, came down, touched the bottom, smack, and then broke out new all-time high. And it's come back into that zone now again. So, these trend lines, price, I think Selena or someone asked about how long they can stay valid for. I mean, I'll jump over to a gold chart. Now this, don't get a fright. Like there's a lot of info on here, but this is like my 1 hour chart on gold from, from way back. And I've kept all these things. There's a lot of lines I could delete if I just wanted to delete things right now. All of these colors right here, like this one, can I control it and command and delete all these at once just so that I can bring them all back if I want to. Let's just test this out. So no, it's not gonna let me. So all of the sessions, when I turn on sessions, you can see like that, there's all the little sessions. So all of these little colors that I've highlighted are recent highs and lows. So I'm not hanging out in this 1 hour chart. I'm zooming into like a 15 and then down to the 1. And now you see, you can't even see those lines. I mean, there's 1, right? And then we've got this trend line that we just broke at the beginning of the zoom, and price is still just hanging around there. But on a 1 hour, yeah, this is going to look crazy to most. But when you zoom in like Dad just did, it's not at all. So, I adjust these day to day. Like these two I drew up recently because those are our low of New York from last night and London. And then up here, same thing with Fibs, going from the all-time high down to the low. If I drag that across, what is that highlighting for me? I can see that that's already that gave me this purple box here. So the 786 886 zone. Now that we've broken this big trend line through here, this pink one, we had that second touch point, and then we came up, rejected it, came back down. Then that gave us the beginning of this trend up. We smashed through that trend line the other night, and we've pushed up. And so the next zone I'm expecting price to reverse is up here. So that's still a long way to go. It's not going to go in a straight line, but there's still 55, 60, so 600 odd pips on gold before we get there. And sure enough, we're just having a healthy pullback now. So nothing moves in a straight line, but I wouldn't be surprised if, we either zigzagged our way up or we even came back down and tested a trend line like this. Because this trend line, how old is this? I mean, this is 42 days. So there's no reason why we shouldn't have a bit more of a retest potentially. Price could come into here and bounce and then go up. But yeah, lots of lines, guys. I mean, you can see there's a gap. So that was actually a complete gap in there at one point, which I left open on my chart for how long? That gap didn't get filled. It took 12 days. So sure enough, price came down. And then here you see little trend lines that I'm drawing along the way. There's a trend line. Once we broke that, we came up and formed one more wedge, broke that, another trend line in there, broke that. Then we came out. And then, little ones along the way, I'm going to draw. Sometimes I delete them. Sometimes I keep them. It just depends on what I'm thinking and going back on things. But, when you start zooming in, none of those things become too crazy. So, yeah, just the biggest, how much do I want to give away? So here's something really fun to look for. The most significant pullbacks and bounces that you're going to find, go back and look for this. The biggest bounces will come when you hit a higher time frame moving average. So teal, I can't remember what the number is, the something. I know pink is 987, 4582.
2584.
Say again?
2584.
2584. There we go. So when price pulls back to the 2584, so this is a 1 minute chart right now. If price was to come all the way back down to the 2584, and if we got a double bottom on this moving average, and you get a trend line break like this, after you've double tapped or triple bottomed or something, that moving average, you are in for a little bit more of a ride potentially. The further price pulls back, the deeper the retracement into the moving averages, the bigger the bounce, usually. And obviously on higher time frames, you're going to see the same thing. So that would be pulling all the way back to here. So check, here's that big trend line that I drew, right? Pink. That big pink trend line, if I bounce back to the 4 hour, there it is there. So I just right click on my lines and I click sync globally so I can see it on anything that I zoom into. So here's now a 15-minute chart. That's where we broke through it. Where was I before? I was zoomed in a bit more than that. Here we go. So this is an 8-minute chart, and there's something in the way up here. Clicking. Here's a 5-minute chart. It's the same deal, right? Here's teal coming down here. So if price comes all the way back down and we bounce on this trend line, and that bounce coincides or gives us confluence with teal, suddenly there's a whole nother reason why we could get a solid bounce from there. And it's probably going to be a fib as well, right? Like there's going to be a healthy retracement from, this low point to this high point, which would give us, look at that, bouncing back, coming back to the trend line would be a 61% pullback or retracement from this run up. So totally normal, guys, for price to come back and do that kind of thing. So Yeah, let me just check. I can't see any questions because of the way I have my Zoom nonsense all structured. But if you have any, dump them in the chat. Otherwise, I'll just unshare my screen so I can see them. There we go. Nas literally double bounced off teal EMA. Thanks, Marcus. There you go. You see, if you start looking for those sorts of deep pullbacks, and obviously the higher the time frame and the deeper the pullback, the bigger the bounce. But if you're getting a healthy retracement, like for us, a lot of the time, for instance, with gold, the 233 can be a healthy retracement. Pulling back to the 233 after a big run could be a healthy reset. Price is coming back, gaining more liquidity to be able to get some momentum and go on another run if the trend is still very much hot and running in that direction. But if price pulls back further and further and further, there's reasons why price is pulling back. I'm not going to get into the big money and big orders and how that all works, but it still respects the moving averages. So have a play with that, guys. Go and look and see when you start to see overlaps with a fib retracement and say teal or pink or the 233, and you start to see, okay, here's teal. We've got a double bounce. This is the 50 to 60% retracement from the zone. Price has now broken a trend line. You're going to start, seeing a whole lot of more reasons why it becomes a safer trade to take. So hopefully that was giving you guys some value right there. So cool to see such a full house tonight. Dad, thank you so much for dropping a ton as usual with the way that you draw your fibs and those pullbacks. That is very, very cool. The way guys, what Dad is teaching is absolute gold. I might be able to weather deeper pullbacks. The reasons I might is because I can see those bigger extensions, and where if I'm able to, I've said this before, scalp my way into a swing trade. So I took I think it was 744. There was a counter trend on gold. I took that one and it ran to the pink teal 987. Sure, price may have run further, but I had a strong feeling that it might actually just reject. So I just closed it. You will not go broke if you actually take some wins. That's actually a big deal. So Dad likes to take the wins and not weather the pullbacks. I can guarantee you, I would have way more wins if I just closed trades more often. But for what works for me is I might take a few more losses, but then I will end up with some huge wins, which cover those. So you've got to figure out what your style is and what works for you. Dad and I have very opposing styles, if you haven't noticed. He will rather just take the money, shut the trade, move on. If I believe there's a high chance this thing can continue, I might close one position or close half of one. If I've got one open, you can enter multiple trades on the way up. But if you've got one, you might decide, I'm going to close and take half off the table and I'm going to move my stop into profit. Or you're going to close 80% and leave your stop right where it is at break even and let it run. You'll come up with different ways that suit your personality type for wanting to either stay in a trade or just close out and move on. And that's going to depend on lots of different factors. Like if you've got a much deeper pullback and you've seen much bigger reasons why price might continue to go, you might want to stay in the trade. And then from there, everything from that point on is gravy. But you've got to kind of know, if you've also got to, like, this is where Tom Hoggard and some people think differently, is he gets the sick feeling if price pulls all the way back. And sorry, let me rephrase that. He has a sick feeling if he closes the trade thinking that price could keep running. And so he doesn't mind price coming all the way back to his entry and then from there continuing. Whereas I get a little bit of a sick feeling if price comes all the way back to my entry point after being in a trade for 2 or 3 hours and knocks me out for break even. That sucks. I don't like that. So I will often look at a trade and go, what will make me feel good about this trade if it just goes absolutely pear-shaped? I would like to take X amount off the table. That's a bank for me for today. Anything beyond this is a bonus. And so you got to start thinking to yourself, like, how do I want to approach my trades right now? Do I want to be in and out quickly as possible, shut it down and move on? Or is this an opportunity for it becoming a swing trade? Then you've got to decide, if this comes back to break even or knocks me out, how will I feel about it? Or if it continues on, etc. So you got to define for yourself what a win is and how you feel about those wins and how you can walk away feeling like a winner, emotionally preferably, and not just feel like you've been whipped around and given all your money back and you were in a great position and it came back to nothing. We've each got to figure out what that looks like for ourselves. And so I'm not going to tell you how to do it. Dad's not going to tell you how to do it. You've got to figure out somewhere in between our two styles, maybe a completely different one. You got to figure out you. But somewhere in there, hopefully you'll get a piece from each of us that can help figure out who you are and what your trading style is and run from there. So cool. Thanks for the comments there, guys. Appreciate that. There's lots of thank yous. Fib settings. Yes, mine are actually in the chat under the pin section. I'm pretty sure they are there because I did a full session on mine a couple weeks ago. And they're actually pretty much Curtis Cobain's exact settings that I have adopted over the last 4 years. Let's checking any other questions. Thanks, Elise. Angela, thanks so much. Such dedication while still recovering. Yeah, always incredible value. Thank you. All right, everyone's saying thank you. That'll do, guys. We're almost on 9 o'clock. So that is us for tonight. Again, thanks so much for joining us live or watching us later.
Thanks, guys.
And we will continue to see you in the chat and our live analysis on Friday morning. And yeah, honestly, we just love doing this, guys. I'm so glad my voice is hanging out. I couldn't help myself. I just wanted to get on and still do something. So hope you all have an amazing, amazing week. Trade safe, enjoy the journey, give yourself patience, zoom out, and just remind yourself that, you inside of this journey being years, like it takes years. No one's going to crack this in a few weeks or months. Zoom out and go, you're going to have bad days, you're going to have bad weeks, and heck, you might even have bad months. And in that process, I just want to remind you with this mindset, zoom out, just like that chart that we zoomed right out. The further out you zoom out, the bigger the trend you're going to notice. And I guarantee that your trend, your learning journey is up. And so just remind yourself of that, is that sometimes you're going to have a bad week and you're going to have a bad month. Figure out a way to be able to walk away and not let it ruin your day emotionally, because you are on a learning journey. And that's something I've had to do constantly throughout the years, is figure out a way to go, you know what, that was a losing day, or that wasn't a great day. This is what I could take away from it. This is how I'm going to mine the gold out of that. This is what I'm not going to do again. This is what I'm going to do better. And that's how you continue to make the next day a great one when you show up to the charts for a fresh opportunity to trade. So anyway, enough waffling from me. Enjoy the rest of the evening, everyone. Thanks again for joining us, and we'll see you in the next one. Good night.